As is often the case with the first week of any given month, the main macroeconomic item is going to be the latest American jobs and wage growth figures. And as usual, they'll come on 3 different days in 3 different formats. The ADP survey is due on Wednesday the 1st of September, and it looks at how many jobs America created last month. For July, the data showed 330,000 new jobs added, a solid enough number after 3 very strong months, although some did question whether the rise of the COVID Delta variant had had an impact upon the reading, which was nevertheless the lowest since February. The Challenger Grain Christmas Job Losses Survey is due on Thursday the 2nd of September. The last reading here was 18,942, the lowest reading on record. Finally, we get the big one on Friday the 3rd of September, and that's the non-farm payroll survey from the US Bureau of Labour Statistics, as the American government gives its verdict on job creation last month relative to the privately backed ADP survey. The non-farm payrolls figure for July was very strong, as it showed the creation of 943,000 jobs, the highest since last August. Many American firms are saying they're struggling to fill vacancies, although the official U3 unemployment rate's 5.4% and the U6 rate is 9.2%, so the picture's a bit of a confusing one. Equally, job growth has accelerated in recent months, and some economists have suggested this may be because American government stimulus checks and employment support have been reduced or cut altogether, prompting many to head back to work. The result of that could be wage growth, so also keep an eye on the average monthly pay number. Last month it was $30.54, 4% higher than the average of the year before. Now, if wages really start to motor, then perhaps inflation is indeed coming our way after nearly 40 years of lying dormant. That said, you can still argue that there are some weird base effects at work owing to the pandemic in 2020, but central bankers will be looking on nervously all the same, because if wage growth does start to gallop, that could mean that inflation is not far behind. On the corporate front, September's due to get off to a quietish start, at least so far as scheduled news flow is concerned, especially as Monday is a bank holiday here in the UK. Just 4 FTSE 100 members are expected to release results, alongside a smattering of mid and small caps. Names which may be worthy of further research include the following, although do please note that some of these dates could yet to be subject to change. On Wednesday the 1st of September, we've got 888, Jim Group and Churchill China. Then come Melrose Industries and Barrett Developments on the 2nd, while Barclay Group and Ashmore are due to round off the week on Friday the 3rd of September. But the company that could just cause the biggest fuss in the week ahead is Bunzl. The specialist distribution business is due to report its first half, or interim results, on Tuesday the 31st of August. After a stirring rally from spring's lows and a roughly 10% gain over the past year, Bunzl's shares are trading at fresh all-time highs. April's first quarter trading update actually didn't particularly impress, but the second quarter update in July offered some reassurance, and ultimately Bunzl's business model is pretty well adapted to the pandemic. The FTSE 100 firm supplies the things that other firms need in order to do their business, not items that actually sell to their own customers. For example, Bunzl supplies disposable coffee cups to cafes, food wrap to supermarkets, hard hats to builders, cleaning materials and, wait for it, bandages, masks and rubber gloves to hospitals. As a distributor of hygiene products and medical materials, Bunzl therefore has some operations that benefit from a slow recovery from the pandemic, even if others might struggle. In July's second quarter update, Bunzl revealed 1% sales growth for the first half on a stated basis and a 6 to 7% rate of growth using constant currencies, albeit with some help from acquisitions. Chief Executive Frank Van Zanten did note that non-COVID related business from industries such as food service and retail was doing better than COVID-oriented sales, where orders have declined sharply, as perhaps you might expect against the second quarter of 2020, where the pandemic was really starting to make its presence felt and the scramble for protective equipment was on. Mr. Van Zanten did say that underlying sales would come in around 6% higher in the first half, though, than they did in 2019's first half. With this more comprehensive set of interim figures, analysts will also dig into the regional patterns, and after any dissection of the sales mix, they'll then move on to 3 more headline sets of numbers. The first will be the operating margin. Bunzl's return on sales has been pretty stable in the 6.5% to 7% level for the last decade or so, on an adjusted basis. Although the stated number has been a bit more volatile owing to restructuring costs relating to companies purchased. Bunzl has suggested the first half operating margin this year will be 1 percentage point above that of the first half of 2019, thanks in part to smaller COVID-19 related orders. That implies an underlying return on sales of around 7.6%, when analysts are looking for 7.2% for the year as a whole. The second figure will be the headline pre-tax profit. For 2021, analysts expect a near 10% dip to £510 million from last year's level, which was boosted by COVID-related business, notably the sourcing of masks and gloves. That drop provides some sort of yardstick for the first half. At the interim stage a year ago, Bunzl's adjusted pre-tax profit figure was £245 million. Finally, watch out for the dividend. Even if the forecast yield's not the biggest at around 2%, Bunzl's streak of annual dividend increases that dated back to 1994 came to an end with the postponement of the final dividend in 2019, even if that was subsequently paid as a special in 2020. On an underlying basis, Bunzl's full-year payment for 2020 was 54.1p, excluding that special, and analysts are looking for a 2% increase to 55p a share this year. That sets the benchmark for the interim payment in comparison to last year's first-half distribution of 15.8p a share. More strategically, watch out for an update on acquisitions. Bunzl's traditionally used bolt-on deals to supplement its organic growth. The firm spent £445 million on deals in 2020, the second highest total in its history, and it's already struck 6 purchases at a cost of £114 million in the first half of 2021. I hope that you and your families are all in good health and good spirits. Thank you for listening, and I look forward to talking to you again next week.